Mehta&Mehta to share the experience and to share the experience not only of panelists but all our participants. Last week, our topic on Dipti 3 was too much successful, too much questions. We were able to answer few, and others we are answering on the mail because we were till 1:30 we were not able to wrap up, and we have to wrap up. So today is another topic, buyback of shares, which is recent trend and it is happening things. So whatever happening event we are taking up. So none other than else, today we have Mr. Dhaval from Zydus Dhaval Soni, and he's a company secretary of the Zydus Lifesciences Limited. And of course, as usual, Mr. Bala is there. Mr. Sudhakar is not there due to preoccupation. The presentation will be done by Jani, Assistant Manager, Mehta&Mehta. And to formally introduce Mr. Dhaval, thanks for your time, and we really appreciate your contribution. He has experience in buyback, and friends, you can ask any question. Mr. Dhaval is ready for that. Any googly bouncer, he is ready to back that.
Okay. Thank you so much for inviting me. It is my pleasure and I'm glad to be here. Thank you.
Thank you. To formally introduce Mr. Dhaval Soni is a graduate and fellow member of ICSI. He is associated with Zydus Group since October 2007. He was the company secretary of Zydus Wellness Limited and is the company secretary of Zydus Lifesciences Limited from February 2019. He is having post-qualification experience of 16 plus years. Thanks, Mr. Dhaval, for your time. Thank you.
Thank you. Thank you so much.
And I will request Mr. Dhaval to say few words on the topic, then Mr. Bala, and then Hers, you can start your presentation. Over to Mr. Dhaval, please.
First of all, thank you, Dipti ji, for the kind introduction. And I'm sincerely thankful to you for inviting me for such a interesting topic. And during the course of our interaction, we would like to share the practical experience which we had done in Zydus last year. So basically, buyback is the exercise by which the companies would like to remunerate their shareholders. So this is the way by which the shareholders would be remunerated either by way of dividend or buyback. So we'll be discussing about the consequences and the differences between how dividend is declared and in lieu of dividend, how buyback is done. And we'll be discussing all the practical aspects of buyback.
Okay, thanks. Over to Mr. Bala.
Good morning to all of you. I welcome you on behalf of my own and also on behalf of Mehta&Mehta for this excellent seminar, which is a current topic actually, because there are lot many companies who have actually done the buyback in the recently. And the question will arise, why company do the buyback? Because probably the company is actually a cash-rich company. They have a lot of cash. They don't need to be used in the operations of the cash. And at the same time, their business is not only investing and earning the money, etc. and other thing. At the same time, they are also working in the interest of the shareholders. So naturally, there are different ways of utilizing the excess cash lying with the company. They have many options. Many options in the sense, the company can actually pay higher dividend, but there are restrictions. Because when you want to pay the higher dividend, if the money is already transferred to the general reserve account, transferring back from the general reserve, there are a lot of rules, regulations which are actually covered. If the profit-making company, they want to give the higher dividend, they will not be able to do it because it is circumstances under which where the company is going either inadequacy of the profit or loss-making company, there is a specific rule which has been actually permitted to draw. So dividend route is not all that okay for the profit-making company. That is one. And the second thing is company also have an option. They can actually go to the NCLT and get the necessary approval from the company to return the excess money back by entering in the compromise and arrangement with the shareholders, because company doesn't need the money. They wanted to return the money back proportionately to the holding of the share. That is another method, which is again long-run method. It takes its own legal indication, etc. and all these things. If you actually witness in the year 1990, 92, 93, 94, and all, there were a lot of companies, they were actually doing that actually. But today the buyback is another option whereby, companies actually buy the share back from the shareholders and they restructure the shareholders per time. And with the result, what happens in the long term, the earning on the equity actually goes up, which is actually the wealth adding in the interest of the long-term perspective of the shareholders. That is the thing. There are various integrities are involved in the buyback, because although there are different methodologies available for the buyback, like, you can actually do the tender offer, you can actually buy through the stock exchange on the floor, you can do the book building process, etc. But when it's come to the practical, which is actually better way of doing it, and which is actually hassle-free, which will be beneficial, which is not very complicated, all those nitty-gritties are involved. That is one. And the second thing is, there will be, when you are handling it, there are a lot of actions which are actually to be coordinated, which are all time-bound. Because nowadays, the listed company, it is not only the company side, but also the listing agreement, which is actually working with a time-bound. If you don't keep up the time-bound, then it is really a problem you will face it. Because especially arising out of listed companies are bound to do, because now every shares are dealt on the demat process. Then what happens is, you can't do anything and physically, everything has to be done only through the online. So which means there are various corporate action which are actually arising out of it, where you have to have a excellent coordination, your R&D agents and DP, etc., which need to be taken into consideration. These are all certain nitty-gritty which is there. I think Dhaval has been handling this very recently, and he will be able to share his practical experience. We will know. And another thing is there, what happens is, when we actually read the rules and regulations, we talk about it. After the buyback of the share, etc., and other thing, and the shares which are actually to be destructed. What is the process? Because the physical we can understand. All the share certificates are collected, actually destroyed, all those things are possible. But when it comes to the demat, how it is actually done, what is the process, what really happens? These are all very interesting things to note the things. So really speaking, today we will have a lot of sharing with Mr. Dhaval. And the topic is very much interesting. As I can see now, we are actually closer to 200 people. That itself shows what is the interest on this particular topic. I think with this, I will leave the hands to Harsh to start the presentation. And Dhaval will be very glad to take up all the questions, answer. He will actually enlighten us with his practical experience. Over to Harsh.
Thank you, Mr. Bala. Thanks for your comment. Participants, as usual, you can understand the question should be on chat box. Along with slides, Mr. Dhaval will answer the questions and Mr. Bala will attend that also. And if required, we'll request you to unmute and speak. But otherwise, put on chat box for better administration. Mr. Mehta, you would like to say a few words?
Yeah, thanks, Dipti. So just to add, what Mr. Bala says now, this buyback is a very important for any company. For many ways, of course, to use those surplus cash. But at the same time, I don't know how many of you know this L&T Mindtree's case also. Probably, I'm sure, we'll discuss during the conversation. So this was more of a just to save the company from those threat of takeover, that was been used. So we'll discuss, during the deliberations and how this buyback can be, can be used as a weapon against those, takeover of a company. Yeah, thank you.
Yeah, thanks. Questions are started, but we will take it as the, presentation starts and when it is relevant. Thank you. Yeah, I'll start. See, the question is started. Huh?
Yeah.
Okay, so good morning to everyone. My name is Jani and I have the opportunity to present on the topic of buyback of shares. So for the sake of convenience, I've divided the presentation into 3 parts, whereby I'll be dealing with the provisions of the Companies Act, the company's rules, and as well as the SEBI buyback regulations. And I would also like to tell the participants that there are recent amendments in the SEBI buyback regulations with effect from 9th of March 2023. So that also will be dealt in the slides. So I'll just begin with the presentation. Yeah, so as per the definition of buyback, as per the Cambridge Business English Dictionary, it is an act of buying something from the same person you sold it to. So for, as per the definition, we come to understand that, basically the company is returning whatever it has, basically the shareholders, they return the shares, and in return, the company gives the consideration that is cash. So as again, the meaning of buyback is share repurchase, is when a company buys its own outstanding shares to reduce the number of shares available on the open market. And there are various reasons as to why the company goes for the buyback route. So the first reason is that the company has excess cash resources with it. So instead of keeping those resources, the company wants to return those excess resources to the shareholders. And by this, the company provides returns to its shareholders by sharing the idle cash lying with it. And further, the company has a benefit of improvement of financial ratios. Like it has an impact on the return of equity as well as the return of assets, and also the earning per share, that is EPS. It is improved with effect of buyback. And further, it is also an alternative mode of capital reduction and method of capital restructuring. So as discussed in the earlier slides, it boosts the share prices. It has an impact on the key financial ratios, that is EPS and ROA. And also, there are various tax benefits attached to the buyback route, whereby the shareholders get certain tax benefits as compared to the dividend. And as Atul sir rightly pointed out,
as and when you want, you can comment.
Sure.
Okay.
So, as Harsh said, see, when we compare dividend and buyback is taxable in the hands of the company. So whatever tax is there on buyback, it will be borne by the company who is coming up with buyback. So the shareholder will get the exact amount of the buyback price. So no TDS, nothing is there in buyback. As far as dividend is concerned, definitely dividend would be subject to TDS if at all the threshold limit crosses. And the shareholder will get the net amount of dividend, which is after the TDS. So in that way, the shareholder will get the exact amount of the buyback price compared to the dividend.
Anuja wants to ask some questions. She raised the hand, I think. Yes, Anuja.
I think let it be in Mr. Chat box, I think, and let's we answer accordingly only.
Okay.
Okay, Harsh, carry.
And one more thing is there very categorically. When you talk about the buyback, it is very, very important. Company should be a cash-rich company. Cash has to be there in the hands. It is not the profit-making company, they can do the buyback. Because profit-making company, the profit is lying in the form of the assets. Say in the form of the money receivable, which is lying in the hands of the people, not with the bank. If you don't have the money, you can't do it. So the first and foremost condition is, I see, Harsh puts it the very first slide itself, cash-rich company, liquid cash should be available. Because when you make the buyback of the money is to be refunded back. Because the shareholder would like to see the color of the money. It is on the paper. So that is the starting point, actually. Yeah. Go ahead, Harsh.
okay, sir. So as Atul sir rightly pointed out that by buyback, we can, strengthen the promoter holding, and we can, prevent hostile takeovers by the shareholders. So that I will explain in my further slides.
So Harsh, before you go ahead, we will also during the course of our presentation, we'll be discussing about the minimum public threshold, if at all it is breaching at the time of buyback. So we'll discuss at an appropriate time that what is the remedy available and what is the course of action which a company is required to do to maintain the minimum public shareholding.
Correct. So here I have explained the effect of buyback with the help of an illustration, whereby if a person is holding 100 shares and he has 10% ownership in the company, and after the buyback the shares are reduced to 50, So here the ownership is increased directly from 10 to 20%. So this is the effect of buyback, whereby the investor can increase its stake in the company. So as discussed earlier, I have divided the presentation into three parts. The first part will be the company's provisions as per the Companies Act 2013. The second part will be the rules, like what are the procedural aspects of the buyback under the rules. And the third part would be the listed company regulation under the SEBI buyback regulation 2018. So first, the first section of buyback is section 68, whereby the act has prescribed the sources of buyback from which the company can undertake this buyback exercise. So the first is the free reserve, second is the security premium account, and third is the proceed of issue of any share or specified securities other than the proceeds of an earlier issue. So these are the three sources available with the company.
So here, just to add what Harsh has said is, we need to take care that the buyback cannot happen through the funds which is borrowed funds. It has to be always from the company. Either it would be by way of free reserves or securities premium account, but no buyback can happen by way of funds which are borrowed, either from the intercompany transactions or even from loans or financial institutions. Yes, Harsh, please carry on.
And further, the Companies Act has also prescribed the quantum of buyback, which is permissible under the Act. That is, if the company wants to go for buyback with the help of the board approval, so the company can go for 10% or less of the total paid up equity capital, and whereby the company wants to go up till 25%, then a shareholder approval is required with the help of a special resolution in the general meeting. So there are certain conditions which are prescribed under section 68 subsection 2, that first of all the buyback must be authorized by the articles of the company. So if the company does not have any articles which empower the company to do the buyback, then the company must first amend the articles and then it must go ahead with the buyback. The debt equity ratio should not be more than 2:1. The shares which are proposed to be bought back should be fully paid up. Like partly paid up shares cannot be bought back, and there should be a gap of minimum at least 1 year between two successive offers of buyback.
There is a connected question in there. What is included in the free reserve? Does the 10% include the amount of the tax?
No, 10% does not include the tax. 10% is only the buyback size.
Yeah. What is included in the free reserve? I don't know why people are asking this, because free reserve has been actually defined. And again, 2.1 ratio is to be satisfied. Yes, of course, it is required to be satisfied.
No, that, yeah.
Yeah.
But
If there are unsecured loans and also there is enough cash available, is there any restriction or concern of the company to go ahead with the buyback?
So Balaji, this was the answer which was given by me, that if there are unsecured loans, then in that case, you need to satisfy the ratio of 2:1.
Correct. Yeah. Go ahead, Ash.
Okay, sir. So further, as per section 68 subsection 5, there are certain sources like from whom we can purchase the shares. First is the existing shareholders of the company on a proportionate basis. Second is from the open market. And third is by purchasing the securities issued to employee pursuant to an ESOP scheme. So these are the three avenues of buyback as per section 68(5). So here
I think Dhaval might share on the purchase of the open market, especially with the listed companies. When the companies are listed in the different stock exchanges, what happens to buyback? Your experience, Dhaval.
To be very honest with you, I have dealt with the tender offer route. So I will, for this unlisted one, I will just have a look and then come back to you.
Okay.
yeah, there is a question between that gap between two buyback is from date of actual close of buyback.
So this is a very interesting thing, because when you want to calculate the date from which a buyback is considered to be closed and when a new buyback is considered to be started. So there should be a gap of 1 year. That is very clear. But that 1 year date should be calculated from which date? That is very important to know. So as per the SEBI buyback regulations, it closes when the amount towards the buyback consideration is credited in the bank account of the respective shareholder. That is the date which is considered as the buyback closure. And now when there is 1 year, that means after that, at least till 1 year, you should not carry on any step for a further buyback. And the first step for doing a buyback would be a board meeting. And as far as listed entities are concerned, in order to have a board meeting, first of all, you need to give a prior 2 working days stock exchange intimation. So according to me, that 1 year should get elapsed, and only after that you should give a fresh intimation to the stock exchange for having a proposal to consider the buyback. So this is the period of 1 year how we calculate.
Yeah, and
Can we purchase only from the employees or we have to give the offer to all the shareholders?
rather before that, the question is gap between 2 buyback is applicable for private companies too. Dhaval, you can just concentrate that whether that 2 years gap is applicable to private company as well.
Yeah, 1 year gap. Yes, I will come back.
Yeah, okay.
What about the valuation of the share buyback for the non-listed
That we can
entity?
take
That
it
you'll take the question because that is being discussed separately actually.
Yeah.
Yeah.
Others are not at present workable. We will
Yeah.
take that and then.
Yeah.
Hello.
Yes, Harsh, go ahead.
Okay, am I audible? Because I just
Yeah. You are audible
Okay.
very much.
Sure. So further, this particular slide deals with the rules, like the company's share capital and debenture rules, with specific reference to Rule 17. So as per this, the company first needs to file a declaration of solvency with the registrar and the SEBI, where as the case may be. So the second document which is there is the letter of offer in form SH8, which is to be filed with the ROC before opening of the buyback offer, and it needs to be dispatched to the shareholders and security holders within 21 days of the said filing, pursuant to the respective rules. Further, as per the rules, the buyback, the period of buyback should not be less than 15 days and 30 days. And further, there's an amendment in the rules whereby if all the shareholders agree to the a lesser period, then we can have a buyback offer with less than 15 days. Further, the verification of the offer received has to be completed within 15 days from the date of closure of the buyback. And also a separate bank account needs to be opened for discharging the consideration obligation of the company, which the company needs to pay to the respective shareholders. And the consideration needs to be paid within 7 days of the completion of verification process as per the company's rules.
Or someone has requested you to be loud a little.
Okay.
Go close to the system.
Okay. Hello.
Yes,
Yeah,
please.
yeah. Go ahead.
Okay. Yeah. So as per sub-rule 10, there are certain obligations of the company which the company needs to oblige with respect to the buyback offer. First off, that is the letter of offer must contain all the true and factual information and should not be misleading or contain any false information which can have an penal impact on the company. Second, the company should not issue any new shares. To issue any shares within a period of 6 months. Also, if the company has announced the offer, it cannot withdraw the same. And also, as Dhaval sir rightly pointed out, that companies shall not utilize any borrowed funds for. These are the general obligations which the company needs to follow under sub rule 10. Deals with the post buyback compliances. So first of requirement is that the shares or securities which are bought back, it should and be destroyed within 7 days of the completion of buyback. The company needs to submit a return of buyback in Form SH11 with the registrar of companies within the prescribed limits. And further, the company is not allowed to make any further issue of securities for a period of 6 months. And there's an exception to this, like a bonus issue or any issue of shares pursuant to any conversion of preference shares or debentures is allowed in under these rules. Further, with respect to the post buyback compliances, a declaration needs to be submitted with SH11, and the same must be signed by 2 directors of the company. And this particular compliance is, to be done, stating that all the provisions and acts are, followed by the company. And further, if the buyback is done out of the free reserves, then the amount equal to the nominal value of the shares needs to be transferred to CRR, that is Capital Redemption Reserve, and which may be utilized for issue of fully paid up bonus shares. And further, the financial statements, that is balance sheet, it must state the amount of the transfer which is done to the CRR account. So section 70, which is the last section as per the Companies Act with respect to buyback, it is a prohibitory section whereby it states that what is prohibited. Like first is the buyback of shares cannot be made through any subsidiary company, including its own subsidiary companies, through any investment companies or group of investment companies. And if the company has made any default in the payment of any deposits or redemption of any debentures or preference shares, then company cannot go for buyback. So here I conclude with the Companies Act provisions. So
before you go ahead with the SEBI buyback regulations, sir, I think it would be apt on our part that we would be concentrating more on the tender offer route, which is prescribed under the SEBI buyback regulations, because this is the route which has been followed by majority of the companies. If you see in last 3 or 4 years, the companies going for buyback are using the tender offer route, which is more simpler. And the another benefit is that even the promoters can participate in the tender offer buyback.
correct.
Thank you.
Okay. So going ahead, further, this slide deals with the general conditions with respect to buyback for buyback of shares of the listed entity. So here there is a similarity, like the maximum limit of any buyback shall not be exceeding 25%, whereby a shareholder's resolution is required. Further, the debt equity ratio should be not than more than 2.1, that is 2:1. And further, all the shares and other securities shall be fully paid up. So again, there is a lot of similarity between Companies Act and SEBI regulations.
So here with regard to
SEBI and Companies Act actually is harmonized in this aspect because there is no controversies. Yeah.
As far as this second bullet point is concerned, which is regulation 4.2, the debt equity ratio shall be less than or equal to 2:1. So here we need to check this ratio from both, from standalone basis as well as on the consolidated basis, and whichever is lower, that we should consider.
Okay.
Please go ahead.
Yes. So there are buyback methodologies which are prescribed under the SEBI regulations. First is from the existing shareholder, like through tender offer route, and second is from the open market through book building process and stock exchange. And there's a further amendment to the SEBI buyback regulations whereby the limits have been prescribed. Like if the company goes for buyback till 31st March 2013, then it can only buy back up to 15% of the capital. Further, till March 31st, 2024, the company can only undertake 10% of the buyback. And till 31st March 2025, only 5% of the capital can be bought back. And further, with effect from 1st April 2025, the company cannot, go for buyback under the stock exchange route. Like it will be phased out, and this is the main intent of the regulator, that it wants to phase out this particular process.
That is very
Correct.
visible because they wanted to actually phase out the open market buyback process. That is why they have the leeway till 25. Yeah.
Yes.
As Dhaval puts it very clearly, it's going to be only tender offer in future.
Correct.
Yes.
So these are the further conditions for buyback of shares for a listed entity. Like within there should be a gap of 1 year from the date of expiry of a preceding buyback offer. So this provision we found in the Companies Act also. The company shall not allow buyback of its shares unless a consequent reduction of capital is effected. And the company shall also not buy back with an intention to delist its securities from the stock exchange. So these are the further conditions for buyback.
When you are coming to company should not do with the delisting, that is where Dhaval is actually talking. What is the amount of the public shareholding with the company? By any chance, if the public shareholding get reduced, then what is to be done to bring back to the required public shareholding ratio? There are the ways and means which are available, and time is also permitted by the stock exchanges. So that is one thing what he has actually brought out initially. We would like to hear more on this though.
So as everybody is aware that a listed entity is required to maintain a 25% of minimum public shareholding. There are certain companies in which the promoter's holding is exactly very near to 75. There are certain companies in which the promoter's holding is somewhere around 74.7, 74.8, and such companies also participate, the promoters of such companies participate in the buyback. And by doing so, what is getting resulted at the end of the day is after buyback is their number of shares will exceed 75%, which is not allowed under the SEBI securities regulations. So under the insider trading regulations and the SAST regulations, there is a specific mention that if the minimum public shareholding threshold breaches below 25% and which is due to buyback, then the promoters will get a period of 90 days from the date of closure of buyback to clear the minimum public thresholding of 25%. So there is a time gap which is given of 90 days. So practically what happens, if at all the promoter shareholding is more than 75, they need to offload the excess shares which is beyond 75% in the open market, and by which the promoter shareholding goes down from 75 to somewhere around 74.8 or 74.9. But we need to also ensure that by doing so, we need to comply with the provisions of insider trading regulations as well as SAST regulations, that whenever we offload the shares in the open market, we need to intimate to the stock exchanges within 2 trading days. So this is the mechanism by which if the minimum public thresholding is breached due to buyback, then there is a time gap of time limit of 90 days in which the promoter's shareholding can be reduced from 75%. Yes, Harsh.
Okay. So further, the regulation 4, sub-regulation 9 states the sources of buyback from which the company can complete the buyback exercise. Again, there is a similarity with the Companies Act, like the company can undertake a buyback through its series of security premium account and proceeds of issue of any shares or other specified securities. And there's a further prohibition, like the proceeds of earlier issues cannot be used.
There is one connected question is there actually. In case of the buyback of the equity share, whether the limit of 25% is calculated, the aggregate that is paid up equity capital and free reserve, or only 25% of the paid up capital given the language of the proviso to section 68 to 2C.
Harsh, would you like to take this?
Which one?
In case of the buyback of the equity share, whether the limit of 25% is calculated, the aggregate of paid up equity capital and free reserves, or only 25% of the paid up equity capital, given the language of the proviso in section 68 to 2C. That means basically 25% how you are calculating. Are you calculating simply on the paid up capital, or are you calculating paid up capital free reserve? That is the question.
It was just slide first. I'll just get one second. I'll just check it.
So as per the listing regulations, as per the buyback regulations, it is paid up share capital and free reserves.
Okay. Yeah, go ahead.
Harsh, you can go ahead.
Okay. So again, in under regulation 410, there are prohibitions of buyback. Like the company cannot, no company shall directly or indirectly purchase its own securities through any subsidiary companies, through any investment companies, or if the company has made any default in the repayment of deposits, or failure of redemption of any debentures or preference shares, or payment of any dividend, or failure to repay any loan or interest thereon. So these are the prohibitions whereby the company cannot go for buyback. So regulation 5 deals with the general compliances and the filing requirements for the buyback. First is the buyback should be authorized by the company's articles. A special resolution needs to be filed at the general meeting if the company wants to buy back up to 25% of its capital for buyback, or 10% through board resolution. And further, the point C is an amendment inserted by the SEBI buyback amendment regulations, whereby a prior consent of the lenders needs to be obtained if the company has, company has breached any conditions or covenants with respect to any loan facility available by it. So regulation 5 further states the timeline, like the buyback must be completed within 1 year from the date of passing of special resolution from the general meeting. A return of buyback needs to be filed with the register of companies under form SH11. And if the company has passed a special resolution, then the explanatory statements under section 102, it must contain all the requisite disclosures with respect to the buyback offer. And the copy of resolutions.
Here actually the explanatory statement is to be written very, very carefully, because they have to give the details of rationale behind the buyback. What is the rationale, what is the reason, etc. And all these things. The explanatory statement is very, very important actually. In fact, we need to take the professional help in writing the proper explanatory statement. Dhaval, would you like to add something?
Yes. Thank you, Balaji. So actually, the concept is like this: as a good governance, whenever we go to shareholders, we go with some reason to the shareholders that why we are approaching and why we need your approval. So shareholders must be aware that yes, we are going for a buyback. But what you rightly pointed out is yes, why we want to go for buyback? What is the rationale behind the exercise which we take for buyback? Largely what we have seen is, largely the reason is one and the same, is to remunerate the shareholders in case the company has excess cash which is available for distribution as dividend. This is the main reason why the company goes for buyback, and this should be very categorically drafted. And you can see the special resolutions or the board resolution or the public announcement or the letter of offer in which the rationale is very categorically mentioned. And more or less, when we go with any legal counsel for drafting such documents, we take help of them. They will use a very common language, taking in view the language which is used by other companies as well. That what exactly the rationale, what exactly the promoters want to convey the message by doing this buyback exercise. And largely, as I mentioned, it is just to remunerate the shareholders by way of excess cash which is available with the company. Yes, sir.
So the resolution must be, the copy of resolution needs to be filed with the SEBI as well as the stock exchange within 7 working days. So here the definition of working days means the working days of the board. And further, no insiders shall deal in the shares or securities on basis of unpublic price sensitive information relating to buyback of shares. So reference to PIT regulation is also made here. And with effect from 9th March 2023, all filings with the board needs to be done in electronic mode. Like this is the recent amendment in the buyback regulations whereby all filings needs to be done in the electronic mode.
Yeah.
What do you mean by electronic mode? Because we hear actually electronic mode, online filing, all these words are there. What is actually electronic mode? What is actually the online filing?
So by electronic mode, what they are trying to say is you should use the digital signature. You should not affix the PDF of the signature. You should not just paste a physical signature. You always use a digital signature. This is what the SEBI wants to do away with all the physical signature or scanned signature or copied signature.
Yeah, that means many companies, what they used to do is they used to scan the signature and keep it on the system. Whenever you want to actually forward the document, you prepare the document, just cut and paste the scan the signature and you transfer.
Correct. And
So,
to add, it would be more crucial on the part of the company and the company secretary to affix a digital signature because it will now contain a time-bearing stamp.
not only that,
it will be
the moment you put the digital signature, that is the authentication actually.
Absolutely.
The concerned person has got a knowledge it is actually done it.
Yes.
But when you actually put the scanned signature, there is always a possibility of, misuse.
Yes. And from timestamp, why it is important is because you know that for a listed entity, after the board meeting, we have to intimate such decision within a period of within a time gap of 30 minutes only. So when you put a digital signature, the timestamp will start from there, and you need to ensure that it reaches to the stock exchanges within a period of 30 minutes.
So that means the company secretary has got a lot of, planning and coordination work on this matter, which is
Certainly it is.
involved so much.
Totally agree.
Yes, Harsh.
Okay. So further, the SEBI buyback regulations has basically 3 modes. One of them is omitted with effect from 9th March 2023. Like with effect from 9th March, we cannot buy back from odd lot holders. There are 2 as of today, there are 2 modes of buyback, that is the tender offer route and the open market route. The chapter 3 of the buyback regulations.
Dhaval, one thing is there, go back to one slide, back. Harsh, when you say odd lot holders, it is not there. What is the fate of the odd lot holders there?
Sorry.
Odd lot holders, the buyback cannot be made.
Yes.
So that means odd lot holders has to actually increase their holding to the extent of required percentage or something like that, or not limited. What is the fate? Because always we talk, all regulations are in the best interest of the shareholders. Odd lot holders also the stakeholders and shareholders.
Correct. So the basic principle is that the buyback should be the option of buyback should be given to all the shareholders, irrespective of anything.
Correct.
So I think that concept has now
So
been
here,
done.
when you say all lot shareholders, no, that means they seems to be eliminated from the buying.
Yes, but nowadays you will see that you will hardly see any odd lot holders.
Yeah, that is true. I'm not saying that it is not true because I remember long time back in a stock exchange, they used to have the separate window for all lot holders trading also. It was there separate.
Correct.
They used to trade that to facilitate the all lot holders. That was there earlier also. Yeah. Anyway, regulation has been made it that way.
Yes, sir. Please carry on.
Sure. So chapter 3 deals with the tender offer route. So I've explained the procedure in form of a chart. So first step would be by passing a special resolution or a board resolution, as the case may be. And within 2 working days of passing such a resolution, the company needs to make a public announcement indicating the record date. And simultaneously, an escrow account needs to be opened within 2 working days from the public announcement. The company needs to then submit the said public announcement to SEBI and stock exchange in electronic form. And for
So, Harsh,
yes.
if you allow me, can I come in here?
Yes, yes.
I couldn't hear you.
If you allow me, can I pitch in here? Sure,
Yes,
sure.
yes, please.
So this is a very interesting thing as far as the buyback of any listed entity is concerned. So as I earlier said that, first of all, whenever a board proposes to have a board meeting for a buyback, you need to give a prior intimation to the stock exchange. And prior intimation is 2 working days, excluding the date of intimation and excluding the date of board meeting. So say for example, if on Monday I'm giving a notice that my board meeting will be held on Wednesday, it is not allowed. But on Monday, if I'm giving a notice, then it should be held earliest on Thursday, because Tuesday and Wednesday, these 2 working days should be excluded. And along with that, you exclude the date of intimation as well as the date of board meeting. So this is very crucial and important practical aspect while you give the intimation to the stock exchanges. Now come the day of board meeting. The board meeting will discuss the rationale, they will discuss the size of the buyback. The board will discuss the price per share, what would be the buyback. It is really very interesting to know that what should be the size of the buyback. Say for example, a company has excess cash of, say for example, 500 crores. And the board of directors think that I want to go for a buyback. Then what should be the quantum of the total buyback size? That is very important, because not only the consideration which goes to the shareholders has to be kept in mind, but apart from that, the other aspects, say for example, your future liabilities which are going to arise in next 1 year, your other capital expenditure plans which are planned in next 2 to 3 years. So all these factors keeping in mind, you have a judicious call that out of 500, yes, I will go with buyback size of 300 crores of rupees, which will be decided. Second most important thing is to decide the buyback price per share. Now you will find it very interesting to know that as far as tender route is concerned, there is no formula which is given in the SEBI buyback guidelines that you have to go with so and so price for buyback. The provision is there in the preferential issue and QIP issue that the floor price has to be calculated as per the last 26 or 2 weeks average. There is no such formula in the SEBI buyback regulations. Hence, a listed entity going through a tender route offer for a buyback is free, absolutely free, to decide the price of buyback per equity share. Now, when the discretion is on the board of directors to decide the price of share, what factors does a company take into consideration while deciding the price of per share buyback price? So they normally consider the weighted average volume price of last 12 months, the price which is quoted on either the National Stock Exchange or the Bombay Stock Exchange, wherever the volume is more. Majority, they consider this average price of last 12 months. They would come to one amount. Say for example, at present, my market price today, the share is quoted at, say for example, 500 rupees. And the weighted average price comes to somewhere around 530 or 540. So if I consider that I want to go for a buyback with a price of 540, what the investors at large are going to anticipate and what they are going to get a message from putting this price of 540, they will always think that today it is 500, in 3 or 4 days or even in very near future If the company is good, the price is definitely going to go up to 540 or 550, and hence there may not be any need to participate in the buyback process.
Not only that, Dhaval, a shrewd shareholder will also go, what is the lowest price in the last 52 weeks? What is the highest price in the last 52 weeks? He will do the further study. He will say that 530, 540 is only a temporary. This will go to this. Why should I do it?
Correct. And that's why the very purpose of carrying out the buyback exercise may fail. So it is always advisable to give some premium on the price at which exactly at present the shares are quoted in the capital markets.
So that means shareholders should get attracted to meet the
Certainly,
requirement of your buyback.
certainly, and then and only then the shareholders will get remunerated. So, and even it should not be like that, that if today is 500, I'm going with a buyback price of 1,000 rupees without any rationale in my mind. Definitely 1,000 we can do, but how the market is going to react, what message the shareholders will get that today is 500, by doing 1,000, what it is trying to convey the message. So it should be always a judicious mix between the weighted average price and the remuneration which a company wants to give to its shareholders. So these two things, the buyback price as well as the buyback size, is very, very critical to identify while doing a buyback exercise. Second, in the said board meeting, there are many other activities relating to buyback which gets approved, be it like appointment of various agencies which are involved in the buyback exercise, constitution of buyback committee, appointment of a compliance officer, and all sorts of things. Other important thing which the board has to decide in the board meeting is to fix a record date. Record date is very important, that a particular date on which a particular person is a shareholder of a company, then and only then you would be entitled to participate in the buyback thing. So say for example, a record date is fixed as 15th of July. If I have purchased the shares on 16th of July, I am having the shares, and when the buyback offer is open, at that time I am the shareholder of a company, but I will not be allowed to participate in the buyback process because as on record date, I am not a shareholder of the company. This is very important to note, that only a person who is a shareholder as on the record date, he or she will only be entitled to participate in the buyback exercise. Thanks, Harsh. You can please continue.
I think Mr. Bala, like last week, we will take all question at the end only. Let Mr. Dhaval comment in between, otherwise, we will not able to complete the presentation.
No issue.
Mr. Dhaval, you can give comment and your expert advice. So whatever is not discussed, we'll only cover in the questions. Otherwise, there will be duplication.
Sure.
Okay.
Sure.
And Harsh, try to complete your presentation by say 1:45 or 1, so that sufficient time can be given to question. Okay.
Sure.
Yeah.
Okay.
Yeah, Harsh, go ahead.
Okay. So as Dhaval sir rightly pointed out the procedure in brief, so I'll take it forward. So the record date is very important for determining the buyback. So from the record date, the first the company needs to then submit the letter of offer, declaration of solvency, and a certificate in the prescribed form to the stock exchange. So earlier there was a concept of draft letter of offer which has been amended, and now only we are required to file the letter of offer with the exchange. So this is a very important document along with the public announcement, and utmost care must be taken to draft these documents. From the opening of offer, before 4 working days from the opening of offer, the draft, the letter of offer and the tender form needs to be dispatched to the respective shareholders, and within 4 working days the offer must be opened, and the offer must be kept open for a minimum of 5 working days. So earlier there was the offer was to be open for 10 working days. So it has been amended, and now it is to be open for 5 working days. So also the escrow mechanisms are to be discussed. Like the company needs to open a special escrow account, and it must deposit the at least 25. If the consideration value is not exceeding 100 crores, then 25% of the consideration value needs to be deposited into the escrow account. And once the offer is closed, then another bank account needs to be opened, which is to be opened with the banker to an issue, whereby the consideration obligation, the amount which the company needs to pay to its shareholders, it need to be deposited over there. And the further after the closure of the offer, the
So,
company needs to complete all.
Harsh, can I please come
Yes.
in?
Yeah, please.
So Harsh
Yes.
was talking about 2 bank accounts. One is the escrow account, and another is the special bank account. So yes, there are 2 bank accounts which the company is required to open for passing on the consideration to the eligible shareholders. The first is the escrow account. So escrow account has to be opened with any scheduled commercial bank, and for that a standard agreement is to be entered into between the company and the banker that we want to open an escrow bank account. Now in escrow bank account, what amount a company is required to deposit in such escrow account, which is very important to understand. So as Harsh said, if the buyback consideration, the total buyback consideration is up to 100 crores, then 25% of the buyback size should be deposited in the escrow account. And if the consideration, the buyback total consideration amount is more than 100 crores, then it should be 25% up to 100 and 10% thereafter. So I will give you an example. That say for example, the buyback size is say for example 750 crores. So in that case, the escrow amount should be 90 crores, because up to 100 crores, 25 crores, which is then, and the balance 650 crores, uska 10%, which is 65 crores. So 65 plus 25, that is 90 crores. So in this escrow account, 90 crores is required to be deposited if the buyback size is 750 crores. Now the next question will come is, how can I deposit the funds in the escrow account? So what are the sources? The first is I can deposit the hard cash, the cash which we can transfer from our bank account to this escrow account. Second is by way of a bank guarantee, which is in the favor of the merchant banker. And if at all a bank guarantee is there, then the bank guarantee should be valid for a period of 30 days from the date of closure of the buyback. So ideally, if a bank guarantee is issued, it is for a period of 3 to 4 months. Third is you can deposit the marketable securities, which should be higher than the consideration, the buyback consideration amount. Normally, the company goes with the cash only. So once this escrow account is also credited with the amount as per the SEBI buyback regulations. Second account, what Harsh just spoke about, is the dedicated, that is the special bank account from which the consideration will pass on to the eligible shareholders. Now, how this special bank account is going to be funded? So it is also very, very clearly mentioned in the SEBI buyback regulations that it should be funded like this. Out of the escrow amount that totals, I am taking the same example, 90 crores. You take 90% from that account. You can transfer only 90% from the escrow account to this dedicated special account. So further taking the example, 90 crores, 90%, 81 crores, we can transfer from escrow account to this special dedicated account. And further taking the example, my buyback size is 750 crores, 81 are already transferred. So additional 669 crores I'm supposed to deposit in the dedicated bank account. And there would remain in the escrow account the balance 9 crores, 90 crores minus 81 which I have transferred to the dedicated account, the 9 crores still remains in the escrow account. So how that 9 crores will come back, I will come back in the later slide. So in that now, in the special bank account, I have the total consideration amount, which is 750 crores. So this is how the mechanism of escrow account and the dedicated special account works, by which the shareholders will be actually, the bank account of the specific shareholders will be credited for towards buyback.
Dhaval, when you're coming back, the public announcement, the draft document actually has been discontinued now. Earlier,
Yes.
people are having a very much an advantageous situation, because when the draft is actually submitted to the SEBI, SEBI will actually come back. You know, these are required, these are the alterations, these are the things, this is to be modified, etc. and all the same. People had an option to do all those things, and they will say, okay, we have gone by this, we have gone there, we have done this, we have done that, and finally it gets approved and people go ahead. Now that
Yes.
option has been taken away in this process now.
Yes.
When that has been taken away in this process, when you are going for the final document from the company itself, from your expert advice, we would like to hear what is the care one has to take on this, because something
Yes.
doesn't go wrong.
Absolutely, absolutely. I totally agree. It is very important that the concept of draft letter of offer has gone. It is now only two things which is most important document in a buyback exercise. The first one is the public announcement, and the second is the letter of offer. The public announcement has to be given to the stock exchanges and published in the newspapers and wherever it is mentioned in the SEBI buyback regulations. Important is this, yes, the letter of offer, and letter of offer is only required to be submitted to SEBI. No approval is required. So it is now the responsibility, a joint responsibility, more so of the company also, but it would be a joint responsibility of the company who is coming with the buyback. Second is the legal advisors also who are drafting the letter of offer. And third is the merchant bankers who will be submitting this letter of offer to the stock, to the SEBI. So we need to be extra cautious to take care that whatever disclosures are required under the buyback regulations or under the Companies Act are fully made in the letter of offer. We need to be on our toes, and we should not skip any of the information which is mentioned. Otherwise, the merchant banker or the lawyers are not going to finalize it, or they are not going to submit it to SEBI. And these are all very, very time-bound activities. 2 working days, 4 working days, 5 working days, and any mismatch in the deadline, or if you breach any of the deadline, I really don't know what is going to happen.
Here,
So
actually speaking, very high amount of the professional excellence is involved.
yes.
Second thing, keeping up the timeline is very, very important, because we don't commit any non-compliances, land up in the
So
problem.
once we go for buyback, we should not think about the breaching the deadline. We should be well prepared before the board meeting, that whatever documents are required, they are well prepared before the board meeting, and so that it is only the execution which will happen once the formal announcement is made.
So the company secretary is on task. He is on
Yes.
toes. Yeah.
Not only on task, but it is the challenge which is given, and if at all this exercise happens, then it would be kudos to all the company secretaries and all the agencies which are involved for completing such a crucial time-bound
Yeah,
activity.
that is true. I agree with you, because there is an excellent amount of the coordination, especially the merchant banker and the legal experts who are drafting the documents,
Yeah.
which are very important. Not only that, even the minute things
Yes.
in the sense, the printing of the document, getting the document, despite the document, reaching the documents, all the agencies who are involved, there's a high amount of the coordination is actually required. Otherwise, it is difficult to achieve the end. Yeah.
Yeah. Couple of more points I would like to add here, which is important to know for a buyback through a tender offer. We already discussed about the record date. We also need to understand about the reservation of certain shares to small shareholders. So as you all must be aware that for a buyback through a tender offer, 15% of the shares are reserved for the small shareholder category. Now, in order to identify that how many number of shareholders would be considered as a small shareholder, you need to understand what the definition is given under the SEBI buyback regulations. So it says like this: as on the record date, if the value of a share as on the record date of minded is 2 lakhs or less than 2 lakhs, then such shareholder would be considered as a small shareholder. I will explain you by way of an example. Say for example, as on the record date, the price of the share is 500 rupees. You just divide 2 lakhs divided by 500, the resultant figure is 400. So meaning thereby, any shareholder who is holding 400 or less than 400 shareholders would be considered as a small shareholder, and 15% of the total buyback size would be reserved for a small shareholder. And by doing this, what ultimately happens is the reserved shareholder, that is the small shareholder category, will always have a higher acceptance ratio than the rest 85% shareholders. Yes, Harsh.
Okay. So after the offer is closed, the company needs to, complete the verification of the offers received by it within, 5 working days. And also the payment of consideration needs to be done from the specified designated bank account. Further, the listed regulation states about the extinguishment and destruction of the share certificates. Like within 15 days from the verification, the company needs to destroy the share certificates. Like if in case of demat shares, it is done through a corporate action, and the company also needs to state and submit the particulars of the certificates destroyed to the stock exchange within 7 working days. So Dhaval sir, would you like to add anything with respect to?
Sure. So before going to the actual modus operandi, how the debit or credit of shares happen, or how the actual amount of consideration is getting credited in the bank account of the eligible shareholders, I would also like to touch upon one another important thing is, which are the agencies which are involved in this entire buyback exercise. The first is definitely the company. Second important is the merchant banker, because merchant banker is the person who is going to be a connecting dot between SEBI and the company. So a merchant banker would be a very crucial agency which is involved. Second is the legal counsel. So legal counsel is a person who is going to help us draft all the statutory documents. Statutory documents mean the public announcement, the letter of offer, the stock exchange intimations, drafting of board resolution, drafting the stock exchange intimations, all the certificates to be given under the buyback, be it the statutory auditor certificate, net worth certificate, any and all type of certificates which are involved in the buyback exercise would be drafted by the legal counsel and will be vetted by the company and the merchant bankers. So legal counsel will play a very important role as far as the document part is concerned. Third is the registrar and transfer agent. So registrar and transfer agent are going to play a role with regard to finalization of the ratio of buyback. And they are also going to prepare the register of buyback for us, and they will also help us to open a demat account in which the shares which are bought back will be debited and credited. So for that, for debit and credit of demat shares, I will talk a little bit later. Another thing, another agency which is involved is a newspaper agency. This public announcements is required to be published in 3 newspapers. One is the National Daily, second is in Hindi, and third is the vernacular, the regional newspaper where the registered office of the company is situated.
There are 3 people who raise their hand actually. I can see here. There's Anuja and Gagan and Pranav. They probably wanted to say something. Can we hear from you people? Pranav? Are you there?
Or you want to take the question answers at last?
No, yeah, we will take, but he's raising the hand.
Okay.
Yeah.
Okay.
Pranav, are you there? Yeah, I can see the 3 hands raised here.
I think by mistake it has happened. Otherwise, it's raised since long. So let it go at the end. We will take it.
Okay,
Since long they have raised this hand.
okay.
Okay.
Fine. Can I please continue?
Yeah, please.
Yeah. Another thing is, another agency which will be involved is the stock exchanges. Very interesting thing, and the practical aspect I would like to touch here is, we need to determine any one designated stock exchange that would act as a designated stock exchange for a particular buyback. Why? Because we need to use the platform of a particular stock exchange to tender the shares by the eligible shareholders. We used, I will give you our example that we use the platform of NSE. What happened is, if a particular shareholder is having a trading account with a broker who is having connectivity only with BSE, those shareholders will not be allowed to participate in the buyback because we have used the platform of only NSE. So in that case, in order to facilitate that, what mechanism was provided in the letter of offer was, you can just do a quick KYC with BSE with NSE stockbroker, and then you will be allowed to participate. But later on, we found that to do a quick KYC is a bit cumbersome procedure and costly, also costly, though it is not much costly, but ultimately to tender shares, if any amount is required to be spent by a shareholder, then it is not warranted. So it is, from practical aspect, I advise that whenever you go for buyback, and that too for a tender route, you use the platform of both the stock exchanges just for the ease of shareholders. Because I remember when the offer was open for 10 working days, in the initial 3 days, every day I used to get more than 150 calls. And majority of them was that I am not in a position to tender my shares. So I had to guide them that you just do a quick KYC. When they go for quick KYC, they will charge somewhere around 800, 900 or 1000 rupees based on the fees. So why a shareholder should spend even a small amount to tender the shares which is given by the company. So it is, my advice is to use the platform of both the stock exchanges while you go for a buyback.
Very important experience you shared. Thank you.
Yeah, thanks. Another is to open a demat account. And last is a trading account. Why demat account? That, say for example, my share capital of 100 rupees, my 100 shares, out of which 10 will get buyback, will be bought back. These 10 shares are required to be transferred in a separate demat account, so that my capital gets reduced from 100 to 90. This is, which is the ultimate thing in the balance sheet which happens, that after buyback my capital gets reduced from 100 to 90. Now when this 10 shares are credited in the separate demat account, then what we should do with those 10 shares which is credited in the demat account? That 10 shares will be once again debited after the shares are extinguished. Once the purchase consideration is passed on, the buyback consideration is passed on to the shareholders, then the shares will be credited by way of taking a corporate action with the depositories. And then the demat account will have a zero balance. There will be first a credit of 10, you take a corporate action, and there is a debit balance of 10, and at last the balance is zero, and my capital get reduced from 100 to 90. So this is where a demat account, where the actual number of shares which are bought back are being dealt with in a separate demat account. Last is the...
That means what you are talking about, the shares destruction process in the digital mode.
Yes, correct.
That is what you are touching upon.
Yes, and that is
how it really given an effect in the demat mode.
Yes,
The
so
destruction of the
correct. We need to take a corporate action with the depositories, and they will give us a confirmation that so and so number of shares has been extinguished as on so and so date. And simultaneously, there would be a debit entry in their demat account. So opening is 0, credit, debit, and last it is 0.
that means again the timely coordination and getting the thing done in time.
It is very crucial.
Otherwise,
Very
your index,
crucial.
otherwise your index of members will not tally.
Absolutely.
Statutory register non-compliance.
Correct. Then we also need to open a separate trading account. This trading account is important for settlement of shares. So when you have a demat account and you have a trading account in your normal life also. So in this trading account, actually this settlement of shares happen. Debit, credit would happen in the demat account, but the settlement of shares through the clearing corporation and the stock exchanges will happen through this separate trading account, which we need to open with any of the broker. Now, when the buyback period is open, the shareholders will tender their shares. It will be open for a period of now 4 working days, and once that is over, the registrar and transfer agent would work very actively to identify that how many bids have been received, out of which how many are valid, how many are not valid, how many are accepted, not accepted, and based on that the final acceptance ratio is finalized. So say for example, I am having 10 shares. I am entitled to tender my shares up to 3 shares, but still it is open for me to tender my entire 10 shares. However, it will all depend upon the ratio of acceptance, that whether my 10 will be accepted or not. Yes, definitely 3 would be accepted, but over and above 3, if at all there are some excess shares which are available, then my some additional shares would be accepted, otherwise not. Because out of so many shareholders, it is not that all the shareholders are going to participate in the buyback. I will give my example. At the time of our record date, there were around 4,50,000 shareholders. And when we saw that after the buyback was closed, how many shareholders participated? It was 1,50,000 shareholders. So rest 3 lakh shareholders did not apply. तो उनका पोर्शन भी कुछ ना कुछ हमारे पास बाकी है, which can be in the ratio of proportion, can be distributed to the shareholders who had participated in the buyback exercise.
But only thing is they have to tender more share than required.
Yes,
They
yes.
should not just calculate the amount of the share eligible and surrender. So this allotment can only be done when the shares are really surrendered more than the prescribed limit. Yeah.
Correct. So next, which is very important from the shareholders' point of view, is one, debit of those shares from my demat account and credit of that amount in my bank account. My shares will get debited up to the number of shares which are bought back, and my bank account should get credited by the number of shares bought back multiplied by the price per equity share. How it happens? First of all, when you tender, when you go for buyback, your entire shareholding will get blocked. At the first stage, your shareholding will be blocked. Then comes the settlement date. On the settlement date, what will happen is, first of all, my entire shares will get debited. I will give you an example. I am holding 100 shares of a particular company, then entire 100 shares will be debited from my demat account. And there would be a simultaneous credit of shares. Say for example, my out of 100, 10 shares are eligible for buyback, then my account will be credited with 90 shares. So you can see that 10 shares are getting bought back from my demat account. So there is a balance of 90 now. So this is how it happens, that first of all, the entire shareholding will get debited, and then it will be credited with the difference number of shares. So this is how the mechanism will happen in the demat account. Now, second important thing is how my bank account will be credited with the particular amount of buyback. So there is a chain of funds routing. I have deposited my buyback consideration amount in that dedicated special account. From that dedicated special account, it will go to the broker's bank account, the stock broker's bank account, which we have appointed for the buyback exercise. Once that is credited, the stock broker in turn will send those money to the clearing corporation. And it is the clearing corporation who is going to credit the respective amount in the bank account of all the shareholders. So there are 2-3 transfers which are happening. One from my normal account to dedicated special account to the stock broker account, and stock broker account to the clearing corporation, and from clearing corporation to ultimately in the bank account of the respective shareholders. We also, in my practical experience, we have noticed that though National Clearing Corporation will give you a confirmation that we have credited the bank account of so and so shareholders, it may happen for some reason that those credit may got rejected for any reason whatsoever. So in that case, what the clearing corporation will do? Clearing corporation will check all those data which has got rejected, and they will once again transfer that amount to the respective stock broker with whom you are holding the broking account. Say for example, I am having my demat account with X. I am having my broker's account, my trading account with Y. Then the bank account of Y would be credited, and it is the responsibility of that broker to transfer those funds back to the shareholder. So this is the mechanism that clearing corporation will get directly credited the funds in the bank account of the eligible shareholders. And if for some reason it is getting rejected, then it will credit the broker's account, and it is the responsibility of the broker to remit back to the shareholder. And this is how the complete mechanism of debit and credit of shares and credit of the amount in the bank account of the shareholder happens. Yes, Harsh.
So this was the first procedure. I will move forward. The second route is the stock exchange route, whereby the first step that the company needs to take is to pass a board resolution or a special resolution, as the case may be. Here, the company needs to appoint a merchant banker within 2 working days from the date of resolution, and submit the public announcement in newspaper, as well as submit the same to SEBI in the electronic mode. Within 4 working days from the record date, the buyback offer should open, and there are further 3 timelines which are prescribed under the regulation. Like if the buyback is opened before 31st March 23, it must be completed within 6 months. Further, it should be completed within 66 working days if it is opened from 1st April 23 till 31st March 2024, and within 22 days if the buyback offer is opened on 1st April 24 till March 25, and with effect from 1st April 25, this particular route will not be permissible for buyback. And further, the provisions with respect to extinguishment of share certificates and payment of consideration is same as per the tender offer route. The third and the final procedure is the book building procedure. Here,
as Dhaval has actually said very clearly, the stock exchange route has not been used by many people. Whatever has buyback has taken place in the recent past, almost I can say near to 100.
Yes.
It is all taken place only through the route of the tender offer. Probably that is the reason the stock exchange route is actually getting changed away over a period. Another 1 or 2 years it is going to be there. I think up to 2025 it is going to be there. After that, this route is not going to be available. Yeah.
So a couple of things which I would like to highlight more is with regard to the promoter's intention. So if it is a tender route, then promoter are entitled to participate in the buyback, and for that they have to give a promoter's consent letter that we want to participate in the buyback exercise, and this has to be informed to the stock exchanges also. Now, when we discussed about this debit and credit of shares and completion of all the activities pertaining to buyback, the post offer formalities are to be completed, be it like extinguishment of shares, filing it with the stock exchanges, SEBI, ROC, as the case may be. You have to maintain the register of buyback. One important thing and good thing for all the company secretaries in practice is that now a company secretary in practice is allowed to sign the certificate of extinguishment of shares. Earlier, it was a chartered accountant, a statutory auditor, but now, along with the director and the registrar, it is the company secretary in practice who has to certify that extinguishment has happened, and such certificate jointly signed has to be submitted to SEBI. So it is a great achievement for all the company secretaries that it is now the company secretary in practice who has to certify all these things. We have to maintain the register of buyback, and creation of capital redemption reserve has already been discussed by Harsh. So I think that's all from my side. I tried to touch upon all the practical aspects, how this buyback exercise happened. If somebody has any question more particularly pertaining to this tender route offer, please let me know. I will try to answer that.
The presentation is there, hers or over?
This is the last slide.
Near to
whereby
completion. We are going to
uh,
talk only the recent buybacks and some case law, that's all.
Yes,
Okay.
so
So
these are
case
the
law also we will take, or later on? Let's finish the
case law is
presentation.
not there, ma'am.
No. And the recent buyback. Okay, this slide is there.
This is the
Okay,
last slide.
now we can take the questions. Right? Yeah,
Okay.
Mr. Bala, you can start.
Yeah, I think I'll start from the beginning so that
Yeah.
we can see. He's Prof. 1 minute.
You can start. The first question of Mr. Madhav is profit on surrender of shares.
Yeah,
by
yeah. I'm coming back. Is profit on surrender of the shares of the individual income tax free? This I think you already discussed actually. You already given the answer between the dividend and the surrender of the share, because you said actually the surrender of the share company bears the tax, and in case of the dividend, individual pays the tax. That you said actually. Are we going to discuss buyback of the startup? Startup, I do not know. Startup, how the buyback can happen. Startup,
I'm not very sure how, because I don't know how cash rich they would be.
yeah, because startup is to still establish the business now. I'm not.
But still, we can check and come back. We will send them a detailed reply over email.
Okay. Is there any unsecured loans, and also there is enough cash available? This you actually said. This is actually you touched upon the
2:1
ratio that you talked about. 2:1 share is that you said actually. What is included in the free reserves? What is included in the free reserves? I think this should not be a question actually, because it's very clear what is the
he
free
has
reserve.
written, does 10% include amount of tax?
That he has already answered.
He has answered.
Yeah, that he has already answered. Again, it is a 2%, 2.1%.
Should be.
A surplus in the P&L account is a free reserves. See, when we talk about the reserve, we are talking about the balance sheet item. When you are talking profit or loss account, it is not the balance sheet item only, it is actually carried over, it is laying in the P&L account. So it will not be included in the free reserves. Although the free reserves, which is available in the current account, can be utilized for the dividend purposes, it will not form. Because it is a P&L account, it is not the profit and it's not the balance sheet account. Can we purchase only from the employees, or have to give the offer to all the shareholders?
Yes.
debt equity ratio, how to calculate? Is it the total debt including the current liability and all other liabilities?
Yes, it will be all the liabilities.
Suppose we have the 5 shareholders and one of them one want to tender his share. Can the buyback process be initiated for only one shareholder without affecting the shareholding of the others? As you mentioned that it has to be in proportion, kindly clarify. It is not the shareholder's intention to surrender buyback. It is actually company wants to buy back. Because the question seems to be something in the other way around. We have 500, one want to tender his share. No.
So what we can do is we can give offer to all the shareholders. Whosoever wants to tender, they can tender. Otherwise, the other shareholders will come.
Yeah, that is right. Please guide, can offer be made to selective shareholders? I don't think offer will be made to the selective shareholder. Offer has to be for everybody.
Everybody.
Yeah, it cannot be for selective. Or it is mandated to give offer to each and every shareholder. It is every shareholders. Can you share the PPT? I think this is already YouTube. It is inclusive of the PPT is shared with all. So there is no separate sharing of the PPT sent to the people. Entire recording is available in the YouTube itself. Is it necessary to open a separate bank account in case of the private limited company having 2 shareholders if the company is ready to transfer the amount immediately? I think separate bank account is actually mandatory. Whatever it is. That is what the law says very categorically. Am I correct though?
Yes.
You are going to please share the presentation that we set actually. Recording of the program. I think the network is doing okay. Whether valuation report is required to be obtained in case of the buyback by the private company as per the company's rule 2014. In fact, the valuation report will be called for other than the listed companies, because listed companies have got an option that they can actually calculate the weighted average as per the norms, whatever it is, and other thing and all. But other than the listed companies, yes, valuation aspect is to be taken. Valuation report is actually required. For buyback, there is no requirement of the valuation report. However, when the buyback is more than 10% or less than 28%, we need to disclose the justification, the price explanatory statement. Kindly clarify what is the valuation report needs to be obtained, the registered valuer, CA valuation report. I think explanatory statement has to give the rationale behind it. What is the thing? That is what he actually discussed. In case of the listed companies, there is no valuation is actually involved as per the regulations. It is only for the unlisted companies, the valuation will be actually called for. Please specify the requirement in case of the buy action from the resident and non-resident. Is there anything?
Dhaval, you will like to say?
Yeah, Dhaval, anything resident and non-resident?
So it will,
Specific requirement for non-resident.
so to be very honest, I am unable to understand that what exactly the person wants to clarify that requirement.
Basically, I think FEMA, it will be through AD only. All the remittance will be through AD. So you have to have the bank account generally with the AD. Banks, all banks are AD. So if your bank is authorized dealer, like you remit the fund to other shareholders, same way it can be done. And FEMA intimation, of course, of buyback is done. That is the
Okay.
yeah.
Can you please clarify the limit of 25% provided in the section with respect to the number of shares or amount? It is actually with reference to the amount.
It is amount.
Yeah, it is not the share. Can you also clarify the amount vis-a-vis number of share? But it is the amount actually. You have to take the amount only. Paid up capital include preference shares also.
We'll check and come back. Prima facie, I feel that it is not included, but still we will check and come back.
But actually the preference share in the recent past as per the index is treated as a long-term borrowing actually. Probably that is why the question is being asked, I think. Can we buy back more than 25% of the share within the limit of 25% paid up? That is SC plus FR plus SP. I don't think you can exceed 25% any point of time. The maximum cap is only 25%. You have only two caps. One is up to 10% by the board, up to 25% by the shareholder. That's all. Beyond 25, you cannot do it.
Yes.
How the valuation of the share is done in case of the private limited companies? What are the provisions? The Income Tax Act also such valuations.
Income tax provisions, I need to check. I'm not an expert in that.
Yeah, as per the Companies Act, valuation has to record to be done for the unlisted company, which includes the private company as well. That is the thing. Yeah. What will be the basis of unlisted public and private companies? No, I don't know. What is the, what will be the basis means? What is the question here? What will be the basis for utilized public or private companies? I'm not clear about the question. What do you want to ask in this question, please? What will be the basis for utilized public or private limited companies? Are we going to discuss the tax liability on the case of the buyback company and shareholder? That I think he touched upon the point.
Yes.
As per the recent valuation, each share value 120 company buyback at the rate of 220. This buyback leads to the legal violation. No, there is no question of the legal violation because it is up to the company to decide whatever the price is there. But the only thing is market reaction, etc. Something different. Because there is no legal violation in this. Can offer letter and a tender form sent through the email only, or we need to send it physical copies to the shareholders?
Physical copies must.
Is there any valuation report or any other report to be attached in the offer letter or support the buyback price?
So coming back to this email and physical copies concern, I would like to clarify that the shareholders whose emails are registered, definitely it can go through emails. But for those shareholders whose emails are not registered, then definitely the physical, then the printed copy should go. We also need to take care of this thing that when we send emails to the shareholders, after 4 or 5 years or by next day, you get a report that out of say 1000 emails which you have sent, 990 are got successful and 10 has got rejected. So even to those 10 whose email has bounced back, to them also we need to send the physical copies.
Oh, good input.
Mr. Bala, that paid up capital preference share include, it is included.
Okay.
Calculate that percentage.
Okay. Pramod Shah says that I am also attending the seminar. He's wishing you for the seminar successful, etc.
Welcome, Pramod Bhai. Thank you for attending.
Letter of offer should be filed with the SEBI within 2 working days from the date of the record date and not from the date of submitting the public announcement to SEBI. Please confirm. As per the presentation, the filing of the letter of offer is certificate from the merchant bankers or to be filed within 2 working days from the public announcement. So the question is, he is saying working days from record date of the public announcement. That's what the question
is. It is the record date. Letter of offer should be dispatched within 2 working days from the record date.
Record date. As per the regulation 8, both documentation are required to be filed within 2 working days from the record date. Okay, somebody has already given the answer. We have seen that after Corona or in lockdown, many listed companies started buyback processes, and then what are the reason? Because of how price shares are due to the market fall after Corona or any other reason? This I don't think we will be able to answer because these are all from the individual company to company, what they felt, what is the company's performance, what is the flyer, etc. Another thing, and all. This is probably, I don't think we'll be able to answer. What do you say, Dhaval?
Yeah, because it will all depend upon the companies and the size of the company and the balance sheet position of the company. And on top of that, the intention of the promoters.
Tax on buyback and other expenses can be utilized from such securities premium account.
Yes. Because securities premium account is can be used for the entire buyback exercise. So even the tax and the related expenditure can be funded from the securities premium account.
How to transfer the rest of the 10% escrow consideration, which will still in the account?
Yeah. Okay.
That you
I
said
told
you'll
that I will
explain
answer
actually.
that.
Yeah.
Yes. I forgot that. Sorry. So once this buyback exercise is completely over, the extinguishment certificate is also filed with the stock exchanges, with SEBI, with ROC. Then this certificate is also given to the merchant banker that the entire activity of buyback is completed, including the consideration passing and the extinguishment of shares. And based on such certificate which we give to merchant banker, then the merchant banker will release the balance amount, which is the 9 crores in the escrow account, and they will transfer it back to the normal bank account of the company.
In case of the NBFC company, whether any intimation is to be given to the RBI for the buyback? If yes, whether prior intimation or once buyback is completed?
Okay. For RBI or NBFC, we need to check. I'm not aware.
According to me, NBFC need to give the prior intimation to the RBI because NBFC is actually licensed by the RBI to function. It is actually monitored. Because I remember not on the buyback, any other thing like, merger, amalgamation, etc. and other things also, we were to give the prior intimation from them. So probably that's what I think. Dipti, you may be able to answer on this. In case of the NBFC company.
NBFC is governed by special because even before doing that, they require prior approval of RBI and all that. That is
Yeah, that is it.
for
That is
buyback.
it. Yeah.
And prior intimation and approval once buyback is completed also. And there was a question on FEMA, I said that, and the valuation certificate. Valuation report is required from the registered valuer only. And in case of FEMA, because if you are remitting to overseas shareholders, then the valuation certificate date should not be prior to 60 days from the date of board meeting. This is the specific requirement.
If somebody has actually put ATM buyback, I don't know whether they are informing or they want to say something. Is creation of the capital reduction reserves mandatory for even the private limited companies?
Yes, Harsh, you would like to answer this?
Yeah, it is.
Dhaval sir, can you please share the process of the amount which is lying in the first escrow? That you already answered, I think.
Yes.
For non-resident, FEMA compliance is required. Yeah, because you know what happens when the non-resident purchase the share, it is normally through the RBI and again the parties, what we call the reportation, non-reportation basis, etc. Those compliances has to be completed. Can you reiterate that surplus in the P&L account is not free reserve? Why is it not considered the free reserves? The free reserves, as I said, actually it is sitting in the balance sheet. And when you say surplus is actually in the P&L account. Because for a P&L account, unless the money is actually transferred to the free reserve, then it doesn't become a free reserve actually. Isn't it, Dipti?
In balance sheet, it will be part of accumulated profit, no?
Yeah, no. Balance sheet, see what companies do nowadays. Earlier, they used to actually transfer the money to the balance sheet and the free reserves, and it should be the free reserve and surplus. That will go there actually. So if you actually say the shareholders fund, it will appear under that. What is the paid up capital, free reserves, etc. But the profit and loss account, it is actually carried over. It is not transferred, it is actually kept so that, it can be utilized. That is the purpose. So long as it is not transferred to the reserves, it is still lying in the profit and loss account. Can it be a free reserve?
Not confirm answer, we need to check.
Okay. unlisted companies valuation will help in the income tax also, hence the shareholders, even though it may not be mandatory. This is a comment which is given. The major issue which we face today during the listing of the private limited companies to SME board promoters promoted during the shares of 25% is buyback option available to SME companies to increase promoter ownership more than 75%.
It's a change in the shareholders' right, and that way people can, otherwise, what is rule is rule. Listing, you have to dilute.
25% of the amount of the paid up and free reserve, 25% of the paid up share capital. He already answered this question. As we received the query from MCA that the amount of the buyback exceed the 25% paid up capital. Please clarify. It cannot be. It is a non-compliance. For the non-compliances, you will be punished. That's all, because you cannot exceed, because the maximum limit is only 25%.
No, what they are telling that
Yeah.
They exceeded paid up capital. Is telling paid up capital plus free reserve, no? Aggregate of it.
Okay.
But MCA raised the query that you have crossed 25% of paid up capital. They should have calculated 25% of paid up capital and free reserve.
And free reserves.
Okay.
I
But I
think
think
we
we
want
need-
to write to MCA. What
Okay.
we can do.
Yeah.
And before commenting to that, I think we should check the MCA letter and then we should comment.
Yeah, we will not be able to comment unless we know the full fact actually here.
We are talking
Yeah.
about law.
Yeah, that is right. Because what we are saying is only what is the provision. If the public announcement is mandatory to the private limited companies.
No, not necessary.
Balance in surplus and P&L is free resource. Somebody is actually saying it.
Nikhil, thanks for answer. Nikhil is CSCS, so I'll
Yeah.
believe.
Okay. Can Yamadam clarify whether P&L account is a free reserve? Again, the same question is coming. Surplus again carried forward to the next year and hence it cannot be a free reserve. This is the answer which is actually coming from Murali.
Nikhil, can you take it? Saddam, just unmute Nikhil. Nikhil Patel. Saddam,
हाँ मैम मैंने किया है वो अनम्यूट कर
Nikhil,
Yeah.
you can unmute. Yeah, Nikhil, take it.
See,
please.
there are another thing I just wanted to add to what even Bala has said. No, you have to have a free reserves before you go for a buyback. Now, assuming that your 31st March is already gone. Now, let's say in December, you want to do the buyback. Your account should not be more than 6 months old. So you can draw your accounts nearby either September or December or even in November and get it audited. When you have your audited accounts, then whatever in your balance sheet is a free reserve. Now, free reserve will always include surplus in P&L. So based on that, if you are meeting the buyback criteria, then you can go based on that. And I have practically done it.
Yeah, the same thing I was telling. It will be, balance sheet as accumulated profit.
Yeah, so you need not go by your March ending previous balance sheet only. Now, for some reason, suppose you have sold off some property or you have some extraordinary profit whereby you are able to meet your free reserves and other criteria or debt equity ratio, etc. Then you can do based on that. But if it is a private limited company, then you get your accounts audited up to that day.
So that
And
is
then go for the buyback.
what you are saying, Nikhil.
Yeah.
Since at the year end, the adjustment is actually happening and the money is actually transferred the P&L account to the free resource after the year end date. It is actually sitting in the year end date. If it is happening in between, the money is laying there. Probably the end of the year, it will might get a transfer. So you are saying that you will have to get the audited account on that particular date so that the surplus account which is lying the P&L account will also be treated as a free resource.
No,
Is that
what
correct?
I'm saying,
Yeah.
I'll just clarify to all the viewers that free reserves will always include your surplus in P&L. Now, let's say we want to do buyback today, which is in the month of July. If you have March 23 accounts ready, so whatever is surplus in your P&L is also considered as free reserve. Now, let us say for any reserves, we are unable to meet the criteria for going for a buyback. Now, assuming in these 4 months, I have done good business and I have a good profit, then I can draw my accounts up to July or August. and I can, but audited one, not unaudited. If I get it audited, and in that audited accounts, if I have the free reserves or other requirements which is meeting the buyback criteria, then based on that I can do the buyback, but only after having audited accounts, even for that part of the year. Are you getting me?
Got it.
Yeah, understood.
Yeah. Thanks, Nikhil.
Thanks a lot. Thank you so much.
Thanks.
For listed company, additional compliances for buyback. I think he touched upon the various things. He separately discussed the SEBI buyback regulations.
So there are many additional compliances, be it the insider trading regulations, intimation under SEBI insider trading regulations, because when a promoter participates, we need to inform under insider trading regulations. If it is more than 2%, then also disclosure under SEBI SAST regulations. Whenever there are buyback committees and there are certain decisions which are taken by it, you have to give intimation to the stock exchange. There are very many compliances which are involved as far as stock exchange compliances are concerned.
Can a company buy back the share at face value? I think it is a theoretical question, because the shares are quoting on the higher price in the market. If the company say, I'm going to buy back at the face value, who will surrender the share?
So theoretical answer is yes.
It is theoretical. Theoretically, yes, you can answer, but it is not a
Practical thing.
practical one. Fully agree with Nikhil. Okay. These are for the private company.
For private company, they are asking, and if you are telling theoretical possible, then for private company. But again, we have to check the valuation, as we said that.
Yeah, valuation report is required, no, for unlisted company. If it
And you
includes a private
cannot
company.
buy back at a valuation without valuation. Please keep in mind, because not only in your explanatory statement, but your income tax also, this will be questioned the buyback, and that valuation is necessary, and that by also registered value. And if you are remitting overseas, then also it is under RBI vigilance as well. So practically it will be difficult. If your valuation is only that level, then it is different. Okay. Yeah.
Benefit of the buyback to the company. I think Harsh has already put a slide on this.
Yeah.
I think that's all. I think I come to the end
No,
of the
no,
question.
there are certain hands are raised.
Yeah.
Just name it, and then we can, Saddam, Anuja, Miss Anuja. Saddam, just unmute karo Anuja ko. Miss Anuja, if you are there, you can unmute yourself and speak, please.
Anuja, are you there?
I think she is not attentive. Okay, leave it. Mr. Pranav. Unmute karao. Mr. Pranav, if you are there, you can speak, please. Unmute yourself.
Yeah.
Yeah, Pranav is there.
Yeah, Mr. Pranav.
Yes, Pranav.
Sir, can you tell what are the conditions of the private limited company, sir?
For buyback, the private company also similar conditions. For LODR, additional requirement. SEMA and Companies Act equally, there is no separate thing. They have provided that for public company, private company, separate regulation. Rules, regulations, everything are applicable.
Yes, and I think Harsh has very well touched upon it.
Valuation, private self-valuation பண்ணிக்கலாம்.
Okay, Mr. Pranav? Yeah.
Yes, sir.
Okay, thank you.
Pranav, I heard self-valuation. Self-valuation is not possible. Valuation will be required from the registered value.
Yeah, that we told.
So that is the thing.
Yeah. Anuja, Ms. Pranav, Mr. Pranav, Nilam, Miss Nilam. Yeah. Yeah, Miss Nilam.
That seems to be there.
Nilam is not there. Chintaman. Chirantha.
Chirantana.
Omkar, better word.
Okay.
Mr.
Hello.
Yeah, yes,
please.
please. Yes, please.
Hello, sir. Thank you so much for giving me the opportunity. I just wanted to ask is opening of capital redemption reserve account mandatory for private limited companies also?
Yeah, we
Yes,
answered.
CRR creation is mandatory for all the companies. It is given under the Companies Act.
Yeah, under the Companies Act, CRR creation is required for all the companies.
It is
Whether it
mandatory.
is private or public or listed, whatever it is. Because law is the common for all. Yeah.
Thank you very much. And Dhaval sir, you are absolutely wonderful. Thank you.
Thank you. Ms. Neelam,
Thank you.
Ms. Neelam,
I don't see Neelam and Anuja.
Mrs. No. Aspi has risen. Aspi,
Can you hear me?
Yeah. Yes, please.
So is selective buyback allowed? Reliance Retail is buying back only non-promoter shares. Is that allowed?
So it is like this, SP, that promoters are entitled to participate in the shares, but it is an option to the promoters that if at all they want, they do not want to participate in the buyback, they will not tender in the buyback process. So it
No,
will
but
be
they are
only to
forcing
the.
me to enter the buyback process. They are
Sorry,
forcibly
sir?
taking away my shares. Reliance Retail is forcibly taking away all the non-promoter shares.
Because I do not see any provision in the SEBI buyback regulation which says that the buyback can be given to only selective shareholders. Only thing is the option is given to promoters either to participate or not to participate.
No, but you can go to the Reliance Retail this thing.
Sure,
notice
sure.
of the-
Definitely,
And
I will
another
go.
thing, can a company buy back only physical shares? This will reduce problems faced by shareholders holding physical shares. Is it possible?
No, it is not possible.
No,
It is
no,
not like
physical
that
share is not allowed. These are
they
demat
can
is
buy back physical
compulsory.
shares.
Demat is compulsory. That is what the
Okay.
law has been made.
No, because many people are having physical shares and they are unable to demat because of time or whatever. So this will be
But-
much better for the shareholders who are holding physical shares.
But law of the land says that any action will be done in demat only. So
Yeah,
even
that
the
is
physical transfer has been stopped since last couple of years.
No, but even in buyback, I have participated with physical shares.
Yes, it is allowed.
Hmm.
I'm not saying that it is not allowed, but it is not that only physical shareholders can apply. It is not
Okay.
like that.
But you can go to the Reliance Retail thing.
Sure. I will go through it and I will come back to you also.
Thank you very much and all the best.
Thank you.
Mr. Gagan. Mr. Gagan, are you there?
I don't think so.
Yeah. So I think
There are few more things have come. Correcting my earlier question, free reserves means which is available for paying the dividend. Hence, I consider P&L free reserve. You are correct, absolutely. Assuming the private limited company, a non-resident employee or participating in the buyback, will FEMA limit for valuation report be applicable? The valuation will be applicable again subject to FEMA regulations. Yeah, Gagan is there, I think so. Yes, Gagan.
Yeah, sir.
Yeah.
Sir, I wanted to ask, in case of private limited company is doing a buyback, can we do it on a price which is calculated on an NAV basis without obtaining valuation report?
on the basis of what?
Net asset valuation method.
See, you require valuation, that is must.
Because law says,
Because you have to justify.
law says valuation.
Not
is-
valuation report, it will be question actually.
Yeah, valuation will be required.
So
And
valuation can be done, well, if we take the valuation report, sir, can we take it on NAV basis? Or is it
Method,
very-
method, let the auditor decide or whatever. In short, I am telling auditor decide, that is okay, but report is must.
Okay, and one more question, sir. If a private company is doing a buyback, how much amount is to be shifted to escrow account? Dhaval sir was saying that there is some limit or there is some criteria to calculate the amount which is to be shifted to escrow account. If a company is doing a buyback of 10 crores, how much amount to be shifted to escrow account?
So the escrow mechanism which I mentioned is given under the SEBI buyback regulations. It is not under the Companies Act.
So that's why for private company, it is not applicable, only separate bank account is.
Yeah.
Okay. And a private limited company is doing a buyback. Can shareholders do a buyback on a disproportionate basis? Say, for example, if a person having if a company is having 10 shares.
Oh, no, it is equal to all. Offer can be.
Offers should be made to everybody.
Some company equal treatment.
Yeah, it
No,
is.
offer is being made to everybody, sir.
Okay.
I'm saying if there are three shareholders,
Yeah.
can two basically surrender their right to buyback, and one can do the whole buyback.
Yeah, it is shareholder
Yeah,
right.
it is
Whatever
shareholder
they
right.
want to offer.
Whatever they want to do, they can do. They are free to do anything what they want to do.
It's their right.
It is their rights. They are free to do.
Okay. Thank you so much, sir. Thank you.
In case of the private limited company doing the buyback, can we do it price calculate? This question, I think you answered that. If a buyback being done in a private company, how much amount to be shifted to escrow? That also you answered, I think so now. If promoter, they have to give letter to company that they are letting their right waive.
Yeah, they have given answer. If promoter, then the waiver letter should be given.
Yeah, that he has already answered, I think so.
Yeah.
I think there is a precondition of the value of the buyback company can decide the value. Okay. That's all I think. So we have come to the end of the question answer sessions.
See, as regards valuation, why we are insisting valuation report and as such, it will be question if we go without the report and the registered value. That's why we are insisting that it's better always to do that. Income tax will be the issue. If there is a registered value, that solve the issue. But as rightly mentioned in the it is not in the compulsory Companies Act, but the when the explanatory statement, you are right, the basis of valuation. If the basis of valuation is done by the promoter itself, it will be not correct, and that's why it is questionable, and that's why we are insisting indirectly it is must. Okay, Bagadi Ajit. Take care. Thanks for your comment and thanks for sharing.
I think we have come to the end of the session. Harsh,
Yes,
thanks
sir.
a lot for your excellent preparation.
1 minute, Mr. Bala, anyone left with the raising of hands, then we can cover up. I think we covered all.
Yeah, you are covered up. You are
Mr.
covered up.
Ajay is covered, no? Ajay Mohanty. Ajay Mohanty. Mr. Ajay, you want to talk?
Hello.
Mr. Mayur?
Hello.
I think Ajay
Yeah,
is
Mr.
speaking
Ajay.
something.
Yeah, Mr. Ajay.
Ajay, are you there? You want to talk?
Yes.
Yeah.
Yes,
Stop.
I am here.
Yeah, please.
So we wanted to know the calculation of gap of 1 year from the last buyback. From when it will be calculated.
So as I already spoken, but I will reiterate that in that 1 year gap, there is no specific mention in the SEBI buyback regulations that 1 year calculation, the first end is that buyback closure period, and closure happens when the consideration pass on. And from that date, 1 year should be calculated till what date. This date is not mentioned in the SEBI buyback regulations. And hence, SEBI in its various informal guidance has mentioned that no action should be carried out, including the intimation of board meeting to the stock exchanges before 1 year from the expiry of the closure of the last buyback offer.
Okay.
I think there is no precondition for
Mayur,
the value.
Mr. Mayur? Mr. Mayur Jala?
Yes, ma'am. Am I audible?
Yeah, very much.
Yeah, I have one quick question. So there is a private limited company with only 2 shareholders. Both the shareholders are holding shares in a physical form only. It's not in a demat form. And shares have been issued to them at a different point in time at a different value. So can private limited company buy back shares proportionately from each of them, but only specific lot of shares, since they are in physical form? Is it possible to buy back specific lot of shares, and is it like we have to follow FIFO LIFO method compulsorily?
basically what FIFO, because see, as on today, you are asking the shares at the valuation which is today.
Right.
Now, FIFO, LIFO, I am not understanding because all are equity shares.
So I'll tell you why this question, because shares are issued at different point in time at a different value. So my cost for a shareholder is different. So from a tax perspective, it will be different for me if I.
Yeah. See, you look at that way. It is shareholders' right which share I want to offer for sale.
Okay.
So you decide as a shareholder what is tax beneficial. You decide.
Okay.
So the offer in the way. See, you don't make tax planning for shareholder. Be a shareholder, and then you make tax planning. The answer you will get immediately.
Right. So see, being a company, privately limited company, it's a subsidiary and holding company. So they are mutually deciding that what should be the
I
best.
got it. If you would have sit in the shareholder sit and made tax planning, you would have not asked me this question.
Sure, ma'am. Thank you. Thanks
Another thing is there, when you are coming to the valuation part of it, as Dipti puts it very clearly, what happens is in case of the Income Tax Act, 115, I think, subsection, which it talks of the taxability of undistributed income. In a private company, unlisted company, if you actually value the share, which is, disproportionately lesser than what it is, when you go to the income tax, then you will have a serious problem with them that will be questioned unnecessarily. So it is always better to have the right justification done and a valuation report in place so that it is become unquestionable. Probably that is the reason
Mr.
why.
Nikhil want to speak. Nikhil Patel want to say. Sadam, unmute Mr. Nikhil Patel. Yeah, Nikhil, you can speak.
Yeah, I mean, somebody asked about that Reliance retail. What I could gather from the newspaper report is they are going for the reduction and not buyback. So they must have gone to the court and then they are buying back everybody.
That's why compulsory it is saying.
Exactly. And then there is another pitfall in this. I was reading an article yesterday in one of the financial paper also, which says now when they are doing reduction and you are getting now, assuming one of the shareholders bought from another unlisted, it was unlisted. So I bought from, let's say from Dipti, 10 rupees face value at 1,000. And then thinking this price will become 2,000. Now, okay. And now they are buying back at 1,300 rupees and 1,363 or something. Or let's say for our example, 1,500 rupees. So technically my gain is only 500 rupees. However, because it is in reduction, whatever they distribute is treated as a dim dividend. And as if the whole 1,500 into 200 will become taxable as a dividend, and I will not get my cost also. So that's a pitfall. I mean, that's just to clarify for that, since he's holding the shares.
Thanks a lot, Nikhil.
Thank you, Nikhil. Thank you. Thank you so much.
Yeah, I think everything is over and we can close the session.
Yeah. Harsh, hats off to you. You nicely divided the presentation of the Companies Act procedure and SEBI. You were good enough to bring all the points together. That is one. I am really thankful to Mr. Dhaval because his excellent practical experience in many areas, especially on the destruction of the share in the physical form and the various precautions which are to be taken while handling the issue, whether the tender offer is actually better than the other offer. These were the things really explained nicely with the reference to the practical aspects of it. Really, it added the greater value to our participants. I'm very sure about it. There are many participants, they raised the interesting questions. Nikhil was kind enough to clarify issues for whom also I am very much thankful. I think on the whole, it was a good learning experiences. We had a good participation as well. Dipti, you can close the session now.
Yeah. Thanks, Mr. Bala. Thanks, Mr. Dhaval. Thanks for your input, practical
Thank you so
sharing,
much.
your time, interest. Thanks a lot for that. And thanks, Harsh, for your presentation. Thank you, Nikhil, for your sharing of knowledge as usual. Thanks, everyone. Thanks, Pramod Bhai, for attending our webinar. Next Saturday, let's meet with another topic. Thank you. Thank you, everyone.
Thank you so much.
Thank you. Have a good weekend.
Thank you.
Thank you. Bye.